Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping owners of bookkeeping, accounting, and tax businesses build, start, and offer quality accounting services that they can be proud of, getting paid what they're worth, and becoming the premier accounting firm in their area. It's each and every week that we actually talk to professionals to help us actually focus on what we need to as leaders in our businesses to, in fact, be the premier accounting firm. So this is going to be no exception. I'm excited about today's discussion. You're going to hear from someone that I think has excelled in a lot of regards, and you're going to want to hear how and why. It's Mark Kappelman. He is the co-founder of realestateaccounting.co and a seasoned professional who brings wealth of experience from his background in accounting, operations, and real estate. He's spent 7 years working in public accounting in top firms like PwC and Ernst & Young, and has honed his financial acumen in doing a variety of things, particularly in real estate. But Mark doesn't just talk the talk, he also walks the walk by building a personal real estate portfolio over 15 million in assets, and has his basically hands-on approach to real estate transactions as he works with individuals to help them actually hone their skills. With degrees from Arizona State University and certifications as a CFA and CPA, he's well equipped to tackle complex real estate financial topics with ease. So Mark, welcome to the show.
Roger, thanks for having me.
Yeah, this is going to be a lot of fun. So I'm familiar with what you're doing, but what I'd like to do is really start at the beginning. I know that obviously you became a CPA. I'm familiar with the fact that you were actually working in the accounting space, but I kind of want to go back to what got you to accounting and why that was kind of the career of choice to begin with.
Yeah, it's kind of a fun one to talk about, and I appreciate you asking about it. Look, I went to college. I wanted to go to a big school. I'm from South Dakota originally, so small town South Dakota. Just wanted a big Division I school in the warm. And that was kind of how I landed at Arizona State. Checked all those boxes. And my dad was a lawyer. My mom was an assistant principal at a high school.
Okay.
And I just wanted to go into business. I don't know why. I don't remember why thinking that, but I just have always wanted to go into business. But I wasn't sure which one, so I was a declared early business school interest, however that worked back in the day. And I was trying to figure out what I was going to do. And I had a couple uncles that had got accounting degrees. One was a CPA and a lawyer, and the other was working in business, but not as a CPA, but they'd both done the accounting route. And they just said, hey, look, if you don't know what part of business you want to go into or what area to focus in, do accounting. They kept saying it's the language of business.
Exactly.
It's the language of business. It's the one commonality that everybody can talk about. And as you move up the chain at a business or at a company, you need to understand what an income statement is a balance sheet, and all the things I appreciate certainly now.
Yeah, it's the scorecard of business. You're exactly right.
Exactly. So that was that. It was that simple. I didn't know. And the other thing they said is, hey, look, I always, my dad was a lawyer. Like I said, I knew if I got an accounting degree, I'd come out with if I got the CPA, I'd have that designation. And so I always knew I would have kind of a specialization, a thing. Hey, you're a CPA. And I just thought that would have job security. And yeah, that's the rest is history.
So obviously you went from there into public accounting. Ernst & Young and so forth. What drew you to actually take that path?
Yeah, I actually had a call with Arizona State yesterday. Ironically, I was talking to their head of accounting because we're now talking about some potential internship programs, which really is kind of cool. It's called coming full circle. But what I told him is look, back then, I kind of thought that was the only option. And I'm not saying it's a bad option, but they recruited so heavily on campus. By they, I mean the Big Four. And then, McGladrey and those as well. But PwC, Ernst & Young, KPMG, Deloitte, heavy on campus. They're recruiting between junior and senior year and senior and master's program. And basically, I had my job secured in the fall of my master's program, and so I still had a year to complete, but I already had my job. Yeah. So it gave me job security. And again, I thought Big Four was the creme de la creme. And I think it's still, it is in many respects. And I thought I was going to be a partner. And, that was just dialed in on that. And that's what I chose. I went into audit, and I did that for 3.5 years at Ernst & Young. And then I came to realize that there was this group called financial due diligence, M&A due diligence. And so I didn't realize that existed. And that was kind of a cool, exciting. I always tell people, when people say, well, what was that? I said, well, when you buy a house, you have to get a home inspection, and the lender won't give you the loan until the house has been inspected by a lender, or by an inspector. Well, it's kind of the same thing in business, in that when a private equity firm wants to buy a company, right, or a public company wants to buy another company, most of the time they get financing. And those lenders won't do the loan unless an accounting firm has come in and done financial due diligence. Lawyers come in and do legal due diligence. Accountants come in and do financial due diligence. So that was what I kind of did when I moved over to PwC. So that was kind of my experience in public accounting.
I love that trajectory, because obviously the second phase where you're going in there and doing that due diligence, the way I've always described it is it's similar to doing a diagnostic on a vehicle that you're about to purchase. Before you just take that used car and purchase it, you take it over to a mechanic and they run that diagnostic, and they're just going to assess, here are the things that you're not seeing under the hood that may need attention. Here are the things that we saw under the vehicle that you need to be aware of. And all of a sudden you're able to go back and in that purchase say, well, here are some of the things that I'm aware of that need attention. Either you can take it off the top, take care of it yourself before we do the transaction, but there's a discussion going on that's a lot more intelligent. And so from a business point of view, you're doing that same diagnostics. You're looking at those numbers and you're trying to help that purchaser assess what kind of risks are in that business, what type of liabilities, and all of a sudden they're able to determine what that valuation ought to be for them as they're then acquiring that company. So I love that type of work. That's really exciting to me. So you're in both fields, the audits, you're doing the diagnostics. Why then get out of that? I mean, you have this trajectory that puts you into real estate.
Yeah.
How did that happen?
So that's another one. So, I can't remember when it was, but there's a very famous book in the real estate community called Rich Dad, Poor Dad by Robert.
Oh yeah, Kiyosaki.
Yeah. And so somehow I got turned on to that book. I think I was still living in Phoenix, so it must have been in like 09, 10 timeframe. And I just read the book, and there's one specific line, and the book's all about real estate. So now I'm starting to get really interested in real estate after I read the book. It's a really compelling book. And there's a line in the book that says, why climb the corporate ladder when you can own the ladder? And it just, a light bulb went off in my head, which was, man, this track is great in public accounting, but I'm just climbing the corporate ladder. And even once I make partner, if I make partner, but I've always had a lot of self-confidence. So I said, when I make partner, I'm still going to have a bunch of bosses and managing partners and partners upon partners. And, I just started thinking, well, what am I owning? Right. And that just led me to this. I got to get into real estate. I got to buy a house. I just wanted to start getting into real estate. So kind of fast forward, my wife, we're living in Chicago, girlfriend at the time, weren't married yet. And she hears one of those ads on radio or a Pandora, whatever it was. It was like, learn how to flip real estate with no money down and make thousands of dollars. And we've all heard those ads. And she was like, hey, you've been talking about this nonstop. There's a free event at the Holiday Inn tonight.
Yep. There's the webinar, or not the webinar, the seminar. Yep.
It was right in Chicago, right on the river, just really cool location, right on the walk home from PwC. And she's like, we should go check it out. And we went and checked it out. And of course, there's a guy on stage that doesn't have the education that we have, right? And whatever that means. I used to think you had to have education, but guy on stage talking about making all this money. And we're like, what the heck? And that kind of led us to say, look, let's go try our hand in flipping houses. And so that was 2013, ending up buying a $120,000 hoarder house on the northwest side of Chicago and put some money into it. And, I'm fast forwarding, sold it about a year later and made more money than we had ever kind of had all at one time, anytime working. And we were like, I'm not going to say the amount of money, but it wasn't crazy, but at the time it felt crazy. And we were just like, wow, we just did that. Like, it was all ours. Nobody else was involved, all our money. There was no somebody telling them what my bonus was. It was just like, we created that out of thin air. And I started thinking about, wow, we paid all these contractors. Like, this is how small business, when they say small business drives the economy, like I realized like all these contractors make good money working on the project. And the title company made all this money on the transaction. And the lender made all this money on the deal. And we still made money. And some family now got a home. And it was just kind of a light bulb moment. And then from there, we bought more houses. Then we started buying rentals. Then we started buying small multifamily, and realized the power of refinancing and leverage that you get in real estate. And yeah, I mean, it just kind of led to Kiyosaki's got this thing that says, it's kind of like Monopoly. You buy a few green houses and then eventually you replace it with a red hotel. And it's kind of how it works if you just keep progressing.
So two things come to mind. One, I remember when I read Rich Dad, Poor Dad. Great story narrative. It's a boy with basically two influential figures in his life, two father figures. And as a story, he just basically, through that narrative, I think, opens your eyes to what types of paths you can take in life and what kind of lifestyle you can actually adhere to, and the differences between choices. What types of choices people are making in their lives and how that impacts their quality of life. So it's a great book. It's a fun read. And it does give you this mind shift that you're able to take, which obviously put you on this journey to real estate. So I have to ask, as an accounting professional, a CPA, how did your perspective of the real estate world differ from what other people who get into flipping homes and so forth? How was that different? Because you knew numbers, you knew maybe how to assess risks and determine ROI. Did that change how you actually were going about the experience of real estate?
I was very comfortable with. A big part of flipping is like putting the numbers in the spreadsheet and underwriting the deal. And so I felt super confident with I'd always been a guy that studied a ton. So I did a ton of analysis on all the comps. When you're flipping houses, it's like, how much is this house going to sell for when it sells?
Yeah.
Right? So I did, the purchase price is the purchase price. That's kind of the end out game. It's like, what can I sell it for? What's it going to cost to rehab it? And then the plug is like, this is what I have to pay. I can't pay more than this to make a margin of money. So yeah. I think I had a competitive advantage in that area. And then the other place was, I was working at PwC, which was a place where people have money. And so early on, I had to get some investors. I was able to get investors from some of my colleagues.
Yeah.
And then 3, I think, when you start going to get financing, it helps to have a strong W-2 and kind of a track record. And I think those would be the things. But I think there's plenty of guys in real estate that don't have my background that
of course
maybe don't overanalyze deals, because there's that paralysis analysis saying,
yep.
Like you can stare it till you're blue in the face. At some point you got to do the deal if you feel like it's a good risk adjusted return. But I think the analysis and the financial piece and getting the financing would be the main differentiator.
Well, you actually hit on some of the things that I thought might have come to light, which is I'm assuming just because of your predetermined nature with the accounting that you might be a little bit more analytical in things. You probably were a little bit more sensitive to margins, and you could actually maybe avoid some of those questionable shady deals because the margins were just too tight, and you were able to actually say, okay, maybe that's not the right purchase and project. We're going to go this route. This has a little bit better margins with the comps that we're seeing today. I was just assuming that you might be able to extract perhaps a little bit more of that emotional component and be more of the analyst and make some decisions at that level. But it doesn't mean you have to be an accountant to do that. I just thought maybe those were some of the strengths that you could lean on just because of your background professionally.
Yeah, I think so.
Yeah. All right. So now here you are, you're in that world of real estate. You're fortunately thriving from one purchase to the next. What brought you back to accounting? What said, hey, let's go back into the accounting space?
That's another good one. So I described how we bought that one and then we kept buying and buying and buying. And so, after I left PwC, I went to work at a tech startup. I was the finance guy. I was doing everything at this tech startup. And so I'm working hard throughout the day, working a lot of hours, but I'm moonlighting as a real estate guy. Nights and weekends, mornings, because I'm a morning guy. I'm doing tons of real estate. I'm underwriting deals. I'm talking to the contractors. I'm doing all these things. But, oh, hey, by the way, there's a bunch of accounting that's being created that needs to happen from all this real estate, right? So there's a bunch of accounting that needs to happen to keep track of everything. And so doing accounting all day, I'm doing deals. I next read the book E-Myth.
Gerber.
Gerber? Is that right?
Gerber.
Yeah.
Gerber.
And so, one of his big things is, focus on revenue generating activities, what you're good at, and outsource everything else, right? There's professionals and people that can do that. And so I'm sitting here going, I know I can do this real estate accounting, but it's constantly behind because it's the last thing I want to do because it doesn't technically make me money. I make money when I go find a new real estate deal and flip it and get it done and sell it. And so I outsource my accounting. And it just comes back really poorly. The turnaround times weren't good. The communication wasn't good. The quality wasn't there. Of course, I'm a CPA. My wife's a CPA actually too. Used to work at Deloitte. She's now a real estate agent, but we both they didn't know how to. There's a lot of jargon in real estate, like every industry, closing statements, NOI, cap rate, all these different things. The people that I hired were clueless about that. And I started to realize, okay, there's benefits and specialization. And so I start looking around, and this is probably like 16, 17, I think, and couldn't really find anybody that was the real estate accountants, the real estate bookkeeping group. And so I kind of parked that idea, though. I mean, I realized it, but I just parked the idea. I keep going. Fast forward a few years to 2019. And me and my business partner, real estate business partner, so I've got a business partner, a guy from PwC. The two of us started doing deals together. He was my first investor, and then he got more involved, and all of a sudden, now we're business partners on basically everything back then.
Love it.
And we were both like, you know what? Let's quit our jobs and go full-time real estate development. It's time. And so he quits and goes full-time development. And mind you, he's got a girlfriend, but no kids at the time. And I've got, I think 2 kids now at this point. And so, I haven't quit. And I'm like, you know what? Why don't I just, I got a mortgage. I got these couple kids. Why don't I go to my current employer and just ask them if I can work 2 days a week? So I at least have some money to pay the mortgage, the fixed costs of the family. And then those other 3 days a week, I'll do development. It'd be a nice, I guess, back to kind of risk reduction, take on some risk, but reduce it a little bit.
That's good transition.
Yeah. And thankfully for me, the CEO, who's a dear friend of mine now, was like, yeah, I'd love to have you 2 days a week rather than losing you. And so I'm like, great. And so, I'm doing that, but then I'm like, man, I don't even know if I want to keep doing this 2 days a week. I want to do something different. And so I get this kind of lead on being an outsourced CFO consultant for a venture capital firm. Okay. And so I've got a contact over there, and he's like, yeah, come on over. You can work 2 days a week and I'll pay you X. And I'm like, okay, that number could work. And so I'm catching up with having a phone call with my friend. Hope I'm not being too wordy here, Roger, but having a phone call with my friend. No,
you're doing good. You're doing good.
Now my business partner at REA. Who happens to be probably the most entrepreneurial guy I've ever met in my life. He was my college roommate. In fact, we went to elementary school together till we were 10, and then he moved away. And this was long before Facebook and cell phones and all that good stuff. So we completely lost contact, but we reconnected in college. He was the guy that was buying and selling Xboxes on Craigslist and just doing all this stuff while we're all working minimum wage jobs. What is this guy doing? And anyway, so he has since started and exited a successful company. He's still my good friend, but we're 15 years out of college at this point. And I start telling him about the outsourced CFO job, and he's kind of ready for his next thing. And he's like, let's just start our own outsourced CFO consulting job. Why do you want to go work for somebody? And I'm like, it's a great question.
It's that entrepreneurial spirit.
Right. And I was like, I had the entrepreneur from real estate, but I wasn't thinking like he was.
Yeah.
And I'm like, I like the idea, but frankly, and we'd always wanted to do something together. But I'm like, you know what? CFO is going to be a hard thing to scale because not many people that make it to CFO level. Like it's a hard skill set. It's super technical. And, when push comes to shove, people are going to want to talk to Mark. They don't necessarily I think they might not want the product. I think they're going to want to talk to you because they trust you. And I don't want to be a consultant my whole life. That was a big reason why I wanted to get out of the public accounting firm is I just didn't want to be a consultant always on demand to the principals that seemed like they were on vacation all the time. But when they needed us, we had to be there.
Yeah.
And I said, look, if we're going to start a company, then I think it should be something that we could probably scale like bookkeeping, where there's a lot more people and it's a lot more about the service and the output versus this highly technical financial model that the CFO needs to do for some bank presentation. And he's like, great, let's start a bookkeeping company. And I'm like, really? And he's like, oh yeah, my prior company, we outsourced our books the whole time. I managed them. And I didn't even know outsourced bookkeeping was a thing at this point. Like I didn't really realize like companies, organizations really scaled this out. I had my experience outsourcing my books in real estate, but I didn't know it was like a big thing.
Yeah.
And he's like, oh yeah, we're great. I've been managing them for 15 years. I'm like, interesting. And then I said, well, look, if we were going to do that, I think we got to pick a niche. And the one niche that I know better than anything is real estate. I've done deals. I own real estate. I just know it. I'm like, so those, and he's like, great, let's start a real estate bookkeeping company. That was it. I mean, that was a story.
Yeah, that story right there is, I think, a great example of how someone can identify a niche. Because admittedly, a lot of people in the accounting space are interested in starting their business. But do I do bookkeeping services, accounting services, tax planning, tax preparation, CFO, as you were describing? And there's a lot of choices and options. And you have to decide of those 6 things, am I just going to do 1, 2, 3 of those services? And all of this has this component of then, do I do the niche? Do I focus on a particular industry? Do I become that expert? And clearly, with the experience you had in the real estate world, that was a natural transition. So within the bookkeeping space, you have this idea. What's come of it? I mean, is it a thriving bookkeeping business?
Yeah. And I would just before I go there, I was just going to say, I have all these people now, friends of mine and stuff saying, I want to start a business, but I don't know what. And I just always say, like, it's great to just pursue your passion, but I would also just take a look at where you have a competitive advantage. Do you have a competitive advantage in an industry? And for us, it wasn't that I just dreamt of being a real estate guy my whole life. That's not true at all. I didn't have any experience until my mid to late 20s. But for the reason I just cited, like, I knew we had an advantage there. We already own real estate, and that's why we can resonate with our clients. Because I can go, look, I've syndicated deals. I've done the operating agreements. I've done all the financing. So we can talk with our clients at a super deep level that I think only somebody could that's done it. So, yeah, REA, we started late 18, kind of first started getting clients in 19. We've got about 125 people now. And 100 plus clients. Yeah, it's growing like crazy.
I love it. Well, one of the things that I find that's very inspirational is the fact that in the bookkeeping accounting space, a lot of people just wonder, how can I scale this? Where can I take this? Is this something that's just me as a solopreneur doing this as a business, or is it me able to scale this and really offer something in this space, whether it be this industry or another? And you've clearly done that. And I think this is something that's very commendable and inspiring. So what advice would you have for someone that is considering niching and choosing a particular industry? Do you have any advice on how to identify what niche to go into? You were kind of alluding to it there a moment ago, but can you go a little deeper?
I mean, I go back to where you think you have a competitive advantage. Of course, you could take the angle of what am I super interested in, and then just go read voraciously and make it a competitive advantage. That's all, I think, a little harder than just something that you already have a committed. If it's sports that you've been studying sports your entire life, maybe there's an opportunity there, right? If it's restaurants, maybe it's something there. If you have a love for food and have always had a deep understanding. I mean, to me, it could be anything. Like through this journey, I talked to this guy who has a not-for-profit niche. He has over 300 employees in this huge bookkeeping business. And it's just not-for-profits.
Yeah.
I think he ran a non-for-profit, or he had a bunch of involvement, earlier in his career. And then he just saw the opportunity, like, wow, I could, whoever they were using for accounting, I can do that. And he scaled it to 300 plus people. So
Perfect. This is great.
yeah, I think there's so many options and so many people. Before I finish this thought, is like, people just come with us. Like, we just love that you specialize in real estate. That's all you guys do. And it's truly all we do.
So that begs the question from me. You say real estate, but there's actually in that niche a lot of nuances. You could do commercial real estate, you
Yeah.
can do uh, residential real estate, you can do second homes, you could be doing investment properties, those that are flipping homes. You've got the idea of property management. Do you niche even further still, or
Yeah.
do you take all of those on?
100%. No, we're super niched. All we do is property management. So we do residential, we do commercial, but we only do property management. Think the big apartment building you see on the side of the road that says, open or advertising for rents, or the big office building downtown, or the strip center in the suburbs. If there is rental property, we do it. And what we wouldn't do, for example, within real estate, we don't do like real estate agents, brokerages. We don't do that. We don't do hotels. Surprisingly, we don't do a lot of fix and flippers. And that's kind of a part of the story I didn't even tell. When we started this, I was like, man, there's so many people out there flipping real estate that need help, because that's what I was thinking about at the time.
Yeah, yeah.
Well, once we built our website and got going, the big leads that started coming in were property management. And we were like, oh, okay, maybe this is what the business was. And so even that was kind of a learning on the fly.
No, and I like that, because what you're describing there is you went into it with a certain idea and you listened to the market. The market was telling you that this is really where you needed to hone in, and you adapted to that and you met that need and you went even deeper there still. So I think that's a great illustration of how even once you've chosen a niche, you need to still be open-minded as to where this might lead.
Yeah, exactly. I mean, you have to listen to the market and see where the biggest opportunity was. And the other thing I would say, and I tell a lot of people this, is, I had a big part of this, and maybe we're going to talk about this conversation, is just kind of, you have to generate leads, right?
Mm-hmm.
There is no business. And that was the other thing about, I think, the E-Myth is like, there is no business without sales. There is no bit like or hate salespeople. There's no business without sales, and there's no sales without leads. And so my co-founder, business partner, his first 15 years was spent with a digital online company generating leads. So that's all he knew how to do. So in that conversation when I was on my porch and we were deciding, let's start a bookkeeping company, I left out the part where he's like, cool, let's put some money in a bank account. I can get a website built. I've been working with these same guys for years. We'll get a website. And I'll put some digital ads out there and we'll just see what kind of leads we come up with.
Yeah.
And so today he runs sales and marketing, and I run accounting and client success. He's
I love this.
Pre-sale and I'm post-sale, and I do a lot of sales now, but for all intents and purposes, he's front office and I run the back office. And we have it's not like two accountants decided to do this that both had the same skill sets. We have differing skill sets, but where, he had managed that outsourced accounting team for 15 years. So he even has a perspective that I don't have, which is, what is it like to be in the client shoes of managing an accounting team? So we just had some complementary skill sets that worked really well in this case.
I love it. Well, the fact that you just brought that up actually is a great segue into something that I think is very important. It's the fact that we teach a principle that says nothing happens until you make a sale. There's a lot of distractions in business that can take us away from what we really need to be doing, which is selling. Until we get paid for our services, it doesn't matter how great we are. And so that is a huge component. And that lends us to this distinction between, okay, what are we doing in the marketing space? What are we doing in the selling space? Two different skill sets, marketing and selling, and you need to understand that. But essentially what you described there, where you've got your partner that's focusing on the front side, the acquisition, and then you're doing the fulfillment, is actually a principle that we refer to as the universal business model. And has a component called mapping the business. It's the marketing, selling, the accounting element, and then the production, which is essentially where you're doing, as you're describing, the fulfillment, taking care of the client, working efficiently. And it's through that efficiency, you get the profitability. So spot on to exactly what you just described. You're living that experience. So well said. Let me kind of take this a little further. You've grown this real estate business. You've grown this bookkeeping business. What are some of the things that capture your attention as to changes in the accounting space that you feel are worth noting, that you're keeping your eye on, that you want to be aware of here in the short term or long term?
I mean, look, if you read, I think there was an article in the Wall Street Journal this week about this huge shortage of accountants. I think that's probably the biggest thing out there right now in terms of, at least in my world, right?
Yeah.
Because, I tell a lot of people, I'm not reading like FASB or ASC or whatever it's called now, all the different regs and the different accounting pronouncements. And, we're not working, at least yet, with big public companies. We work with some REITs that report into some really sophisticated investors. But for us, I'm not worried about revenue recognition or some of these things. I mean, there is revenue recognition rules in real estate, but it's a little more straightforward than like software and all these complicated sales and how you need to record stuff. But in general, it's just talent, right? And so how do we get more leads on young people that have accounting experience and that really want to pursue this industry? So, I'm hyper focused on how do we hire straight out of college, or because most of the people we hire are experienced.
Yeah.
But I do know that for this thing to become, the big five, for us to become part of the big four and we go be the REA to be the next big five, for example, you're going to have to build a way to hire inexperienced people and build them up to be the leaders of companies. Because I'm a big believer that like the strongest leaders come from within. They know your ethos. They've been there a few years. They've worked at the ground floor, such that, the best managers, I think a lot of people say, are the people that have done the job before. And so that's what we're really focused on, building from within, hiring people at the entry level that we can build up into leaders.
I love that because technically the company I operate is a post-secondary school for accounting professionals. And so one of the things that we obviously do is train individuals in bookkeeping, accounting, tax, QuickBooks, and so forth. So all of these different courses are essentially doing what you just described. It's the firm identifying key individuals that are loyal, that have an aptitude, that are committed, and investing in them. And it's through that investment that you give them additional skills that you're able to then leverage in offering services to your clients. So now you're having this individual that once was the bookkeeper become now the accountant, become now the tax preparer. All these skills that they acquire are marketable. That's what you're taking to the client and getting paid for. So it's really, I think, what you're just describing. It's a way of growing the business, taking talent and enhancing what it is they brought to the table to become so much more. So I love that. Here's what I'd like to do. Obviously, we're wrapping this up and we've had a great conversation. I want to come back to you for a closing thought. But before I get that closing thought from you, I wanted to mention two things. One, Mark has been very kind to offer, for those of you who are listening, the opportunity to speak with him if you'd like to just get some questions answered, get some insights, just get some free advice on what he's done with his business. So if you go to the episode description, there's going to be information there on how you can book a moment with him. And in taking some of his valuable time, maybe get a few questions that you may want to have answered as you're transitioning in your business and looking for some advice. The other thing that I want to encourage you to do is there in the description, there is a link to receive a copy of the ebook In the Black. In the Black happens to be the guide to running a very successful accounting, bookkeeping, and tax business. It allows you to work on your short-term, midterm, and long-term goals, and it addresses things much like Robert Kiyosaki and Michael Gerber did in their books, so that you can literally become not only just that great entrepreneur, but become what I refer to as an accountrepreneur. So if you're interested in applying the 9 principles on having a profitable business, I want you to check that out. And then in addition to that, you can also get a copy of Red to Black in 30 Days. It's the how-to guide for accounting professionals, the quick quick guide to help businesses stay cash positive, going from red to being in the black. So go to the episode descriptions, definitely get copies of that. But as a summary of our conversation, one of the things that I really wanted to highlight is Mark, he's lived a very familiar journey, identifying when he was younger that accounting is the language of business. If you want to understand business, you need to understand numbers, and it brought him into the accounting space. He did a traditional path getting into audit, and I thought that was wonderful. He then went from there to actually assessing businesses for valuation, and I think that's a fun journey just simply because you really get to look at the underpinnings of the business and really evaluate what's going on there. And then he heard about investments and flipping homes, and through Rich Dad, Poor Dad, really found this opportunity to become an owner of assets, and went down that path that so many people do getting into the real estate world. And from that has grown a very successful real estate arm of his family, 15 million in assets. That's something to be very proud of. But that brought him back full circle to the accounting world, becoming then the founder of a great bookkeeping business that's niched into the real estate space. I think it's phenomenal that he's appealing to that market. I think it's a much deserved and needed area for people to be offering quality bookkeeping and accounting services, and he's doing exactly that. He's built a phenomenal business and something to be very proud of, and it continues to grow. And I think his expertise there is something to really be kind of applauded. So, Mark, I appreciate all these little insights. What comment would you like to leave here at the end?
Yeah, I would just say that if you want to give this a shot, just give it a shot. And, the context behind that is, I remember telling my wife, look, if this doesn't work out, I can always go back to public accounting. These firms have been around for 100 plus years, and maybe it's arrogant, but they would die to have me back. And if PwC won't take me back because they think I was disloyal, KPMG, EY, or Deloitte would love to have an experienced person back on their roster. So I think the risk is probably lower than maybe you might think. And that would be my main thing. Of course, there's some risk, but I think it's pretty minimal.
I love that. Try not to live life with lots of regrets is what I'm hearing there. If you're interested, take the risk. And at the end of the day, there is still a demand. And as you pointed out with the Washington Post, there is a need for accounting professionals. And so if you chose to go out there and do it in a private perspective, great. But if not, you can always go back into something that's a little bit more formal. So tap into that entrepreneurial spirit and take advantage of it. So wonderful advice. Mark, I've really enjoyed having you on the show. This has been a wonderful discussion. I appreciate you sharing our story. For our listeners, I do want to encourage you to, if you haven't already, subscribe to the podcast. This is something that we do each and every week where we share from the experts things that you need to be doing to work on your business. So if you haven't already subscribed, definitely do so. Go back and listen to some of our past shows. We have some highlights and playlists that you can binge listen to, and I would encourage that. Definitely set your notifications to be reminded of each and every week when this is released, and then you'll get those different notifications to listen to these new episodes. Also, I want to invite you to GrowCon. GrowCon is an annual event. It's a live event for owners of accounting, bookkeeping, and tax businesses. You do not want to miss it. It's each and every May. It's where we put on the stage these experts to actually give us advice on how we can be running our business, to grow our companies, to offer quality services, and do so efficiently and profitably. And you want to hear from them, especially in person. It's there that you get to interact with your peers, hear from other individuals that are being successful, what they're doing, build relationships with them, and lastly, also meet our staff here at Universal Accounting, finding out what you can do to be in business for yourself, but not by yourself. Also, with regards to this, if you'd like more information about how you can apply these principles in your business, definitely give us a call. You can reach us at 801-265-3777, or you can visit us online by going to universalaccountingschool.com. And always remember this, if it's about accounting, it is universal. Take care, have a great day, and be safe out there, everyone.